JB Cycles here with a weekend update on February the 22nd. Maybe we have seen the bull market top, but it's too early to be sure about that, because we have seen this range recent weeks, and we really haven't broken down from it. And we have this trend line that we have not broken yet. And as you see, we are, if you look at my cycle here, we are at the cycle low. So we are at the 2-week oscillation low, meaning that the bias for this coming week is mostly bullish. So as you see, my old scenario here in dotted red suggested a possible double top. So we could absolutely bounce up from here, make a shoulder or a double top this coming week, but you should also be prepared to see some direct breakdowns here. So for new subscribers, I would like to zoom out a little bit and show you a bit of my cycles. So we have the 28-year cycle here. We are going back 200 years, and the 28-year cycle is now turning bearish for the next 10 years. Also, we have an alternating cycle here of 56 years. So every second of these 28-year cycles is a war cycle, and an inflation cycle, an interest rate cycle. Everything, interest rates, inflations typically go up in this part, and we see wars. So prepare for more to come the next 10 years or so. So the next cycle, well, actually we could compare today's situation in blue here with the cycle that topped in the 1970s. So you see we have quite similar action, at least from this point on, from 2009, comparing to the 1950s and 60s, and then in the 1970s well, I should say this is the S&P adjusted for inflation. So that's why the red S&P here looks that weak in the 1970s and early 1980s, because we had very high inflation. So that means we can correct through price or through high inflation, or most likely both. And well, you also see here the 3.5-year cycle within this, but let's have a look at the 3.5-year cycle here in red. So we are in the yellow topping part of the cycle, and this topping phase could extend into early summer, and then we should have a bearish bias into next summer, or even maybe next fall, 2026. As you see, this is the 3.5-year cycle, and when going back like 100 years. Well, right now my program is auto saving, but there we are. So, well, here we are going back for a little while, so you can pause the video and just have a look at the cycle here. Anyway, the next cycle is the 17-week cycle. It is connected to a planetary cycle of heliocentric Venus-Jupiter, and it's connected to solar activity and geomagnetic activity, and the human sentiment effects from this. But that's pretty irrelevant to us, because we are only interested in the stock market, and the stock market has this cycle of 17 weeks. And we are approaching the top of the cycle, so it is a little bit early for the market to start crashing down here, but it can happen. But as long as we have not passed the cycle top, we should be careful to get too bearish here. It's possible, but it's also possible that the market just bounces back up and wants to continue this topping process for a little bit more. So as I showed you, we really haven't gotten real bearish confirmations yet from the market. This is the S&P daily data and my wavelets, and normally, I have shown you this before, I would place this rectangle of 26 trading days at the wavelet top, and then I say in the bull market I will typically look for the next long position at the right end of this rectangle, and that is in about 3 weeks time. Now this is with bull market rules, but if this is now just about to turn into a bear market, we have this bigger box that we use in the bear market, because in the bear market the downtrend is longer. And as you see, I have placed these arrows here. They basically show, if we are to turn into a bear market here, then I would expect some kind of a downside like this. That would be a typical start of a bear market. So time-wise, that would be more than 3 weeks. That would be a low in about maybe 5 weeks, I think. And regarding downside, the first move should go down to the election low, and then the second part of this correction could, go deeper than that. But yet we have not broken any major averages or trend lines or range boxes, so at the moment we don't know if this is anything. We could bounce right back up again on Monday and get all of this could happen just a week or two later. So at the moment this looks like a promising setup, but we don't know if it is really triggered yet. It could be postponed for a week or two. Very possible. I think that was it for this video. It looks like the market has switched back to follow my original green 4-week cycle, or you have the 2-week oscillation within it. And it's possible. Here I'm showing a 4-week cycle starting at this point, and the next one starting here. But it happens that that the 4-week cycle shifts by 2 weeks. Maybe it's like this now, actually. So it's a little bit too early to say. So at the moment I'm just looking at the 2-week oscillation, and I don't know which of these 2-week oscillations is the strongest one or the most bullish one. But at the moment, on Monday, we are at the 2-week oscillation low. The bias is for the upside. But if we do a breakdown, we have these 2-week oscillation lows shown with these diamonds. So we could continue down into this one, and then maybe bounce up, and then continue down, and maybe the final low of this correction would be early April. Then we are making a bigger shoulder, and then we continue down. Just speculating at the moment. It's too early to say we have seen a top in the market, but I was expecting a top around this time. So we just have to wait and see. See you next time.